Hey everybody, welcome back. Here's another video for the Currency Pro Academy course. Today we're going to be talking about supply and demand in a very refined way, and that is flip zones. So let's start diving into what exactly I'm talking about. So in the last video we learned about supply and demand basics, how we highlight with our rectangle tool the consolidative areas within the market. In this video we're going to go over a much more refined approach. Okay, so we're on the hourly time frame right now on Euro USD, and I have a few zones marked out here. We're going to start with the higher time frame first, the 1 hour, and then we're going to drop down to lower time frames. So first of all, I have a zone right here, this rectangular zone, and this is a 1 hour demand zone. And basically, instead of highlighting this entire consolidation, what I'm doing is refining it down to the last opposing candle before the momentum kicked into the market, right? This is very similar to order blocks, which we're going to learn in the next section, but it's basically order blocks and supply and demand are very similar things. There's just minor differences, right? But this is the last bearish candle before the bullish up move where all the momentum kicked in. So that is my refined supply zone. Demand zone. So instead of having my rectangle tool like this to cover the entire consolidation, what I'm doing instead is refining it down to that one last candle, the last low momentum opposing candle before all the high momentum kicked into the market, okay? So that explains that. That's my 1 hour demand zone. Now I also have two more demand zones above it, and those are more visible on lower time frames. So the 1 hour time frame is the first place I like to start for order blocks and supply and demand zones. 4 hour is just for basically gauging the direction of the market. But 1 hour and 15 minute is where I locate my real zones to trade from. So let's drop down to the 15 minute now that we've gone over the first demand zone. And so now that we're on the 15 minute, we can take a look at the second demand zone that I've highlighted here. So this one right here, same exact concept. I highlighted the last small low momentum bearish candle before bullish momentum kicked into the market, right? We have a lot of volume being pumped into the market there. This is the very last candle. Now it doesn't really matter if it's bullish or bearish candle. All that matters is that it's a low momentum candle right before the actual momentum kicked into the market, okay? That's where a lot of people get confused. They think it has to be a bearish candle. It really doesn't. Technically, like a candle like this could be looked at as well if it were in a different place. Like if it were down here. Doesn't matter if it's bullish or bearish. Doesn't matter about the color. Some people have just one solid color on their charts instead of a two-tone color scheme. I just prefer this, just visually, I like it, so that's what I do. But just to clarify, it doesn't matter if it's bullish or bearish. All that matters is that it's a low momentum candle and it's right before the actual momentum kicked in. That's all we're trying to do, is locate the last point of demand before the market kicked into gear, okay? So this was the 1 hour candle. Now that we're down to the 15 minute, we have this one here that's easily identifiable. And then we have another one up here as well. I'm going to go over that shortly. But yeah, those are the two zones that are visible from here. And now we're going to drop down to the 5 minute time frame, because as you can see, price started trading down, but it never actually reached that demand zone. And of course, not this one either. But it's good to have them on the chart just so you're aware of where price could potentially go. It also helps with setting profit targets once you have entered a trade. So I was monitoring this one. Price came close, but just didn't quite make it there. So I leave it on the chart and continue to monitor price. But as price kicked into gear again, we saw a clear break of market structure, right? There was a break of structure here as well. That's what prompted me to highlight this as well. But now we have another break of structure, right? Price kicked in to high momentum, broke through market structure. And so that prompted me to look at more recent price action. And to do that, I was down on the 1 minute time frame. I like to scalp this pair on the 1 minute time frame. So let me just adjust this really quick. Okay. So as you can see, the same concept all over again, right? We have the last low momentum candle before the bullish momentum kicked into the market. And on the 1 minute time frame, we have more break of structure here. Very minor structure, but still break of structure nonetheless. But again, that prompted me to look for a demand zone for price to trade back to mitigate, right? Because similarly to order blocks, which we're going to go over in the next video, supply and demand zones and order blocks, in order for them to be validated or at least have more confluence, it has to be paired with a break in market structure, okay? So that's what happened with all of these zones. We had a break of structure here. The point of origin was this 1 hour demand zone. We had another break of structure here. The point of origin was, we had a break of structure here. The point of origin was this demand zone. And same thing here. We have a break of structure. Technically, this is a point of origin on the 15-minute, but I was going much more refined than that because I was looking for an intraday trade. So I was on the lower time frames. So again, on the 1 minute time frame, break of structure of this area, price pushed right through it. This was the point of origin and the last low momentum candle before high momentum kicked into the market, okay? So that's what prompts me to highlight this demand zone. So again, this is the most recent demand zone. We of course have two others below it, but it would take quite some time for price to get there. So I'm always looking at the most recent price action, because if I want to get in the trade, it's not going to help me if I'm targeting something, you know, all the way down here or whatever. Like, it has to be in recent price action if I want to catch a trade that day, for example. It has to be up to date, right? So I'm always targeting the most recent zone and monitoring that closely. So as you can see, price had a huge impulse and then started moving downward in a very corrective manner. You can see how this whole move here is all very high momentum, full body bullish candles. We had one large full body bearish candle, but from that point on, we were just kind of messing around, just consolidating in a downward motion, very corrective manner, right? However, we did mitigate this demand zone. We actually mitigated 50% of the demand zone, so this can really be considered mitigated from this point on, right? Sometimes price just taps into the top of the area and then trades away, but to me personally, it's fully mitigated once it's hit at least the 50% zone, right? Sometimes it can trade lower than that, of course, but 50%, and I'm looking at it as fully mitigated. So this is a fully mitigated demand zone. And so this is where the flip comes into play, all right? So the whole concept of this video, basically, other than refining our supply and demand to the last candle instead of the consolidative zone, the flip zone is basically a very refined entry style. It's one of my personal favorites. It's not the only way I enter trades, as we're going to go over in later videos, but it is one of my favorites, especially for scalping Euro USD on the 1 minute time frame, because this happens almost every day, okay? So let me explain what the supply and demand flip is, okay? So as we've already explained, we have a demand zone right here. Price mitigates this demand zone and then trades away from it, okay? So if this demand zone were strong enough to hold, then technically price would continue trading higher and higher and higher. We would have a break of structure, maybe a pullback, and then continue higher again, right? We'd have bullish order flow. But what a flip zone is when you watch price react to the zone, it has to trade away from the zone, and then if price has enough bearish momentum now to break through the zone, that's what the flip is, because then we would be looking for a supply zone to target instead of a demand zone, right? So it flips from demand to supply. So let's see if that's what happens here, or if price just takes off to the upside instead. Let's play price forward. Okay, so price dropped to the downside and clearly violated this zone, okay? So let me just go over this briefly one more time. Price came down into the demand zone, mitigated it fully, traded away from it, but failed to create new highs. See, instead of, breaking structure here, breaking structure here, breaking structure here, and continuing bullish order flow, we couldn't even break this minor structure here. Price traded away from the demand zone, but didn't have enough momentum to create new highs. So instead, we just kind of topped out right here, right? And then from that point on, price fails to the downside. So what that tells me is that demand was temporarily respected, but overall, supply is taking control and pushing price to the downside. So that's the flip. It flips from demand to supply. Okay, so now that the demand zone has been violated, This is also, of course, a break of structure. So let's map that out because this was our low and we clearly broke that low, right? Let's map that out. Okay, so that's our break of structure. So now that we have a break of structure and a confirmed flip zone, where can we look for entry? Well, since supply is in control, we have to locate our last point of supply before the momentum kicked into the market. And technically, like we went over in the last video, if we're being general about it, the entire consolidation zone is right here, okay? That's the entire consolidation zone, but that is an extremely messy way to enter a trade, especially on the 1 minute time frame. Like, we don't want to do that. We want more precision than that, right? We don't want this massive stop loss because that means in order to achieve a good risk to reward ratio, we would have to be targeting extreme lows just to get a profitable trade, right? So we want to be more precise than that. So like I explained earlier, what we can do is refine our supply zone to the very last point of supply. And that was, again, doesn't matter if it's a bullish or bearish candle. In this case, it is a bullish candle though. But all that matters is that it's the last candle before momentum kicked into the market. So this bullish candle right up here, let me just draw it out. This bullish candle right here is a very small bodied, wicks on both sides, no directional bias. It's a very low momentum candle. There's no volume in the market at that point, right? Immediately after that candle prints on the chart, we see these huge full body bearish candles kick into the market, causing this break of structure, okay? So that's a very important takeaway. These full body candles broke the structure, but the point of origin is this last candle here. That is our refined supply zone, okay? So now that we have that mapped out on the chart with our supply zone template, it's just a gray template that has an S for supply. That is now our ideal entry point, okay? So in this case, what I would do is I wouldn't refine it any further. I'm already on the 1 minute time frame. I never trade below that, to be honest. So at this point, I would set a sell limit order right at the bottom of that supply zone. Stop loss can be 2 pips is fine. Keep in mind we're trading Euro USD here, so that's one of the tightest spreads across all brokers. It doesn't matter who you're with. Euro USD is the most commonly traded pair in the market, so it has the lowest spreads by far. So 2 pips is perfectly reasonable. To be honest, I don't really go any lower than that. Like, technically, you can keep the stop loss just above the zone, but I'm not trading with a stop loss of like 1 to 1.5 pips. That's just too tight for me. I don't like that. You never know what's going to happen with a broker and spread, so I like to keep it a bit safer. So in this case, 2 pips would be reasonable. Even 2.5 to 3 pips would be reasonable, but again, completely up to you. Doesn't matter. In this case, for this example, I'm going to go for 2 pips. So now we can get into targets, right? Because we've already set our stop loss, we've set our entry, we've confirmed why we're entering this trade, right? We had a demand to supply flip, supply is now in control. The supply created a break of structure. We've located the point of origin, and that is our target entry point, right? Now, in terms of targeting profit for this trade, we can simply target the higher time frame demand zones, right? Because we had them there for a reason. The thought process is that eventually at some point, price is going to be drawn to those zones like a magnet, okay? They're unmitigated demand zones. So now if supply is in control, we can anticipate that eventually price is going to reach those demand zones to mitigate them as well. Just like we had a mitigated zone here, price needs to mitigate all those other zones as well. So we have 2 here. We have 2 higher time frame zones, the 15-minute and the 1-hour zone that we identified earlier. So if you want to be a little more modest, or if you want like an actual intraday trade, you could certainly just go for the first zone here. And as you can see, 2 pip stop loss, 18.7 pip target profit, which leaves us a 9.35 risk to reward ratio, which is absolutely phenomenal. Can't complain about that. That is more than most traders make in a month, if not a quarter. Some traders don't even make that in a year, to be honest. So that right there is phenomenal. Now, if you wanted to be a little more ambitious, you could certainly target the bottom zone here. Keep in mind, we should be confident in this because we know that supply is now taking control and we're seeing bearish order flow because we've had a break in market structure. Price is moving impulsively to the downside, right? Like all the signs are there for supply to take over. And so we should be confident in targeting these lower demand zones, right? So for this example, I'm going to target the lowest demand zone for 39 pips of profit, which increases the risk reward ratio to 19.5. It sounds absurd to some people, I know, but let's just watch this play out and see what happens, because it is more than, it's entirely possible. These kind of moves happen every day in the market. It's all about having a precise entry and knowing what you're doing and being able to read market structure and order flow. So let's play price forward and see what happens, see if this trade gets triggered and how it progresses from there. Okay, so we're moving back up correctively. There we go. So we're triggered into the trade. Let's just move this over a little bit. Okay. Yeah, so triggered into the trade. So far, basically zero drawdown, just wicked into it a little bit. So no drawdown so far. Let's see how it plays out. Okay, so right away we have some pretty insane momentum. So you can see how well respected this supply zone is, right? Price needs to come back up and mitigate that point of origin that caused this break of structure in the first place. We need to mitigate that zone. And you can see as soon as it's mitigated, that's when momentum kicks in, because price gathered all the fuel that it needs basically. You can look at this as stopping at the gas station for fuel with your vehicle, right? Price was stopping for fuel. As soon as it refueled, it took off to the downside, just melted away. And of course that causes another break of structure. So we can map that out. I know it's visually obvious that price broke structure, but I like to map it out anyways, just to remind myself at the start of the next day or whatever, the next trading day, just to remind myself the current order flow of the market. So if I have break of structures to the downside mapped out on my chart, it's a constant reminder that we are currently in bearish order flow. So let's continue to play price forward and see how this progresses. Okay, so that was quick. So if you were targeting this first zone here for 9.35 R, I believe it was, 9.35 risk reward ratio, your take profit would have been hit. You would have been done for the day. How long did that take? Under 15 minutes. Yeah. So less than 15 minutes, and you would have made almost 10% profit. So that is absurd. So yeah, if you were targeting that first zone, you would have been done for the day within 15 minutes, potentially even done for the month. It depends on your targets, right? So that's how easy it can be if your analysis is precise, as we were here in this example. But of course, for this example, we're targeting the lower zone. So let's see if that ends up happening. Let's play price forward once again. So another break of structure here, because that was our low. Price impulsively broke below it, right? That impulsive bearish candle broke right through it, and then correctively moving upwards again. Of course, more entries can be taken, right? Like I'm not factoring in any scaling in opportunities here. Like there's supply here, right? So you could technically take a trade from there. I don't know if it would be a win or a loss. I have to play this forward and see what happens, but technically you could be scaling in at any corrective move within this down move and treating it as a new supply zone. But let's continue to move price and see what happens. Okay, so yeah, that would have been a minor loss if you took another scaling trade from there, but overall the position is still in profit. So let's see how this plays out. Okay, moving quite correctively. Oh, there we go. Okay, let's extend this forward so we know that we're still in the position here. Right, so another clear break of structure here. Right? So we're still in the trade. Yes, price was moving basically sideways for quite some time. It would certainly take some emotional control and discipline to be able to withstand that. However, if you can, it really pays off in the end, right? Like if you trust your analysis enough, then you should be able to be comfortable holding this whole trade here. And of course, you can trail your stop loss to certain points if you'd like, if that makes you feel more comfortable, or you can certainly, for example, you could set your ultimate take profit for this bottom zone, but you could have removed like 50% of your position at the first zone, right? And that way, no matter what happens, you've already won, right? So as soon as we hit this first zone here, you could take off the majority of your position and move the stop loss to break even so that there's no risk left on the table and you've already won. So at that point, you're just playing with house money, right? So whatever happens, happens. That's what I do quite often as well. I don't just leave the entire thing running and just hoping for the best. I'll often secure profits at structural points and supply and demand levels such as this, move stop loss to break even, and then just let it run and see what happens, right? So let's keep going and see what happens here. Oh, almost hit take profit. And let's see what happens. Yeah, there we go. So it hit the full take profit, which would be, about 19 and a half risk to reward ratio. So if you're risking 1% capital, that's almost 20% gained in one single trade. And it took a total of, 2 hours. So this is still within one trading day, right? We're on the 1 minute time frame. So if you wanted to hold this entire trade, just over 2.5 hours, and this is an insane profit for that short amount of time. 19.5 R is absolutely insane. So yeah, that is how we can utilize supply and demand and refine it to the last candle and have this refined entry style, the flip zone, right? So just to go over the criteria here one more time, we have a clear demand zone, price mitigated the demand, traded away from the demand, right? That's the key factor. We have to reject the demand zone. If we just blew right through the demand zone, that is not a flip zone whatsoever. It has to respect it temporarily, move up higher, but then it has to show signs that there's not enough momentum to create new structural highs, right? And that's exactly what we did here. We made equal highs instead of making a new high, okay? Price wasn't able to gain enough momentum, enough buying power to break these structural highs and create new highs. There wasn't enough momentum for that. So that's an early warning sign that price is most likely going to break structure to the downside and gain more bearish momentum. And that's exactly what happened. So again, demand zone got mitigated. We traded away from it, failed to make new highs, and then traded through it, creating a break of structure, okay? As soon as the break of structure happens, that's when our bullish order flow changes to bearish order flow. So that's when we can start looking for sells, and that's when the supply zone can be identified as we did here, and that supply zone is our entry point. And from that point on, you can see as soon as price mitigated that supply right there, that last point of supply, we just absolutely melted to the downside. Huge profit-taking potential here. Corrective move, just regaining some fuel for price to make this next massive bearish high momentum move to the downside, ultimately hitting the final take profit for 19.5 R. Okay, so I really hope you guys gained a lot of value from this example. Feel free to take notes and just watch it as many times as you want. It's here for you. It's part of the membership, so watch it as many times as you like, gain as much from it as you can. As you watch it more and more, you may pick up on some things that you didn't understand at first, so that would be a great idea. So stay tuned for the next video, guys, and I'll talk to you soon.